Greetings and a very warm welcome to all of you. Thank you very much once again for taking out your time and allowing us to present ourselves. We are yet again with something very, very interesting, something very unique. And this is where Umesh Bhai is the master of decoding the past. See, guys, it is very important to understand that the events can be new from time to time, but capital market reacts in a particular way because the psychology of investor is always the same, whatever may be the time. So it is very important to understand what to do at what point of time, and all the answer lies in the history. So we are taking this effort to decode the history, decode the past, and all the events in a very particular manner. And without taking much time, I'm handing it over to our CEO, Umesh Kumar Mehta, to take you through the history and tell you exactly what we need to do today in terms of our action plan. Thank you very much, guys, once again, and over to you, Umesh Bhai.
Thank you, Viraj, for a nice introduction. Good morning, every one of you. Uh, to those who like history, probably this session will be of a great interest. We have seen many wars. 77 years later, today, language being not any barrier, everyone knows Russia-Ukraine war. But in the past, there have been many more lethal, deeper combats, wars. But how stock market reacted during those times, what were the macros, how investors reacted. Let's study those events, those wars, so that will give us a perspective how we can deal with current situation, and how as investors can take benefit of current crisis that we are into. So it's very important, if we learn from history, and that gives conviction, and conviction brings courage. And when we have courage, we can invest, we can ask our investors to invest, because we know that eventually this all had happened in the past, and history just repeats itself in different forms. So that is where we come from. We have done a detailed analysis of wars, World War One, World War Two, how investors have reacted, how politicians have reacted, how what was the war, what was the economic situation, and how stock markets have behaved. Today, as part of disclaimer, I'm going to use some of the charts I use, because it's important to connect. There are certain events, and when we see that in terms of price action, we are able to relate and connect. Look, this is what happened, and this is how markets have reacted. So nothing to do with technical analysis, but I will use a lot of those charts. Second, as part of disclaimer, this event program is for ARN holders. And yes, as mutual funds are investment, mutual funds are subject to market risk. So let's begin, friends. So let me start my PPT. Okay. So decoding the past. Today I'm going to cover summary of World War One, World War Two in a little bit more detail, how major country-wise, France, Britain, US, Japan, Germany, how stock markets have delivered return over a past century for winning countries and for losing countries. So I mean winning and losing countries during World War Two. We also had India-China war, how Indian markets have behaved. We will study that. Why invest now? What's the time? Why now? And why what is put in SIP? Okay. So now let's begin. Let me. So this is an 108-year-old data. Dow Jones Industrial Average. When World War One began, you all will be surprised. Within 2 days, US market was shut down. And so in 28th of July, 1914, the war had begun. And within 2 days, Dow was shut. And 3.5 months later, sometimes in mid of December 1914, the market was reopened. And Dow Jones was down by around 30%. And by Christmas, market made a bottom, and thereafter markets had doubled. But you know what? The mentality, or how the herd mentality behaves. US was not at all involved in any war during World War One in the initial phase. The war had happened in the Europe, but US investors got frightened and they started selling. And therefore, the government, or for that matter, stock exchanges closed the exchange. That, oh my God, what's happening? Let's close the exchange. And then when they reopened, it was down by 30%. That was a great buying opportunity, wherein USA was nowhere involved in the war. So these are, once we know all these things, these are all learnings for us to understand when this type of events happen, and when we Indians, or for that matter companies, are not impacted. There is no point just going by the herd mentality or for the current narrative, but take that courageous and bold decisions, because at times the current narrative can be wrong. So market had a fantastic run up and market doubled by 2015. Woodrow Wilson got re-elected because of the slogan that US was not in the war. But thereafter, by 2015-16, lot many ships, merchant ships of US were being drowned, and therefore there was a loss. And therefore US decided to enter into World War One. And when they entered into World War, when they officially declared, from there onwards, US market was down by 19%. And at the bottom of stock market, US entered into Australian Hungary duo. So these two countries were together waging a war, and US attacked them. Can you imagine, as from a stock market perspective, there is this war America has waged, and market has made a bottom? See, because stock market is all about, when the maximum pessimism, isse zyada kya, the bad news from this will be what? So when they know that this is the worst bad news, then they discount it, and therefore the markets have thereafter rose. Although the war was going on, thereafter, since next 6 months, the war was still continuing, but the market kept on going up. And the moment World War One ended, that's the time market had a little bit of correction. But look, thereafter, market had done a phenomenal job. Investors, those who were able to withstand that fear, that pessimism, that narrative that world is in, US is into war, anything can go wrong. Still, they made money if they just have the courage to go against and are able to accumulate stocks, investments for their portfolio. So this is how markets have behaved 100 years ago during World War One. So thereafter, on the ensuing period, market probably made 3x, 4x returns in next 5, 7, 8 years. So this is how market behaved after World War ended. So these are times when, so our thought process is, when these conflicts are there for investor, these are times to accumulate portfolios, accumulate stocks, accumulate mutual fund units in their portfolio, so that after war, when good time comes, when prosperity comes, when expansion comes, when new order comes, when again new order establishes, great many fortunes can be made. So this was World War One. So now let's come to World War Two. So World War Two is well documented. 6 years of war that had happened. Detailed scripting of war has been recorded by historians. How it happened, what all maneuvering politicians did, how stock market got impacted. That obviously, of course, I will show you. So now let's go to World War Two. So what I have done is, we will focus on country by country, instead of focusing first on Germany or US. So let's first focus on only France. So France as a country, how investors over there behaved, and what was the economic situation pre and post war. So let me give you a brief background. So by 1932, so if you can see this year, this period, so 1932 was a period wherein entire world, US European countries made a bottom from the 1929 crash. So from 1929 to 1933, you all know that US and other major economies were into depression because of stock market had corrected by around 89%. But surprisingly, France still kept on moving down because France as an economy was weak, and therefore stock market knew that, and therefore they did not recover. So let me give you a like to like comparison. So 1932 bottom over here, and then France actually 1936 bottom over here. But if we see US made a 1932 bottom year. 1932 bottom was made. Thereafter, market economy recovered. During world wars, the market corrected, but only the correction was by half, 50%. So by 1939-40s, when the wars were on, US market was only down by half, 50%. Compared to that, UK market, if you see 1932, the bottom was made, no doubt. But again, the market rose. But during World War II, UK again came back to 1932 levels. That means as a country, it is far weaker as a stock, as a company, that if we may say, if USA is a company and UK is a company, obviously USA is a far stronger company because it had fallen down by half and UK had fallen down back to square one. Therefore, UK is a much weaker country. So these are just to give you a perspective as country. As more when I explain, we will come to know that why UK was weak and what happened to British Empire. So now let's conclude. Let's move forward. So once war was declared in 1939, 1st September, surprisingly, France market, when they closed and when they opened, it opened gap up, because as a country they realized that when they associate with France, and they gave up. So France was easily conquered, and they wanted to associate with Germany, the second most powerful economy of that time. And they knew that German was prosperous, and therefore they will also become prosperous. So this was the thought process of investors, and therefore they bidded up the price of stocks after World War II, when Germany occupied them. So how uniquely each country reacted towards war. So this is very interesting. There is no straitjacket formula that if war has happened, prices will move up or move down. Each country, each economy had its own unique composition, and they have reacted accordingly. So as I explained you, market gap up and then steadily went up. And this is how slow and steadily my stock market moved higher. So now let's come to second most important country, UK. So UK, before I enter into my conversation, here Winston Churchill got elected. So this is UK 30 industrial average, and they made a bottom in somewhere in June 1940. So let me recollect. Here in January, the war was on. Nominal wars were being there, were being pestered by Germany. Germany invades Denmark and Norway. Holland surrenders. Then came the news Belgium surrenders. Then came the news Norway surrenders. Italy declares war. France surrenders. There is absolute pessimism. And this is how UK prices had fallen from 80 to bottom of 50. But here all the news were negative, and they were in the middle of war. Over here, Hitler attacked Britain. And these are the time frames, a time period wherein the stock markets have moved from whatever prices till date. So now let me cover how Britain as an economy was behaving. So Britain initially was alone, weak, and they suffered heavy losses. English army in 1940 was decimated, exhausted. The German bombing of London and other British cities in the early hours left shattered buildings. The German U-boats drowned merchants, so many merchant ships, because ultimately they want Britishers to starve to death, because if the merchant ships are out, they will not be able to import goods, foods, or services. So in other side of the ocean, in Pacific, Japan was conquering British ruled countries like Singapore, Hong Kong, Malaysia, Indonesia. Their navy was superior, and they destroyed Britishers navy very, very. They also decimated. So here, there, Japan and here Germany, both all over the world, they broke the empire of Britishers. They were become bankrupt. Some of the historians have said, and this was this is how Britain was. This is how they have during World War II. This was their situation. So now, in initial years, USA did not support Britain. Thereafter, later, the bonhomie emerged, and thereafter the support came. But initially, Britain was alone. This event was the turning point for British later. So in Dunkirk, so this is a place in France. The Britishers, the strongest and the most powerful army, around 3 lakh armies, they were able to come back. Although Hitler tried to push them back, they tried to destroy them, but somehow or the other, they were able to go through, and they reached the shores of Great Britain again. And Britain, the investors and the country were assured that if the soldiers who were returned from Dunkirk are on British soil, they will be able to protect them from the German invasion. And therefore, what we see over here is market slowly and steadily recovered because of the fact that the UK was able to get back the most powerful army on its own shores again. However, UK was decimated all across the world. Its empire was broken, shattered, bankrupt, but now they are here to just protect their own country, England. So this is how World War II wreaked havoc in British ruled countries, and this is how they decimated. So this is British, and now let's come to US. So up till now, since 1941, late 1941, US did not enter into war. It was only entire Europe, wherein Germany attacked, and they were conquering countries like anything. UK was decimated. Their ego was broken. Over there, Russia was still remaining. But overall, majority Europe was being conquered by Germans, and now something happened in the Pacific Ocean. So I will run this 2-minute video.
On Sunday, December 7th, 1941, shortly before 8 a.m., Japan launched a surprise attack on the United States of America by bombing the U.S. naval base at Pearl Harbor, Hawaii. The base was attacked by 350 Imperial Japanese aircrafts. Though the raid only lasted 75 minutes, the Japanese destroyed or damaged nearly 20 American naval vessels, including 8 battleships and more than 340 airplanes. Over 2,400 Americans died in the attack, and many more were wounded. While the attack on Pearl Harbor was a surprise, tensions between the US and Japan had deteriorated over the decade, in particular with regards to Japan's expansion into China. The plan for attacking Pearl Harbor was to destroy the US's Pacific Fleet, a move which would give the Japanese time to carry out its plans to keep control of the Pacific without US interference. The shock of the attack without declaration of war enraged the American public and rallied the nation to get behind a war many hoped to avoid. At the beginning of his speech to Congress requesting a declaration of war, President Franklin D. Roosevelt delivered this now famous line.
Yesterday, December 7th, 1941, a date which will live in infamy. The United States of America was suddenly and deliberately attacked by naval and air forces of the Empire of Japan.
On December 8, 1941, one day after the attack, the United States Congress declared war on Japan, officially entering World War II.
So let's do a little bit on Japan, and then I will answer the chart in front of you. So Japanese said to themselves, they are the superior race, and they had not lost a single battle in last 2,600 years. Honor and courage were a dominant force in public life. Their air force and navy were modern and powerful. Japan took advantage of chaotic events in Europe and laid its hand on colonially ruled countries like Indonesia, which was ruled by Dutch, Malaysia, Hong Kong, Singapore, and other small Southeast Asian countries. They thought of removing US from the Hawaii Islands. After Pearl Harbor attack, US entered the war and steadily and destroyed Japan thereafter. And by September 1945, you all know, by bombing Hiroshima and Nagasaki, the war had concluded. So now let's come to US market. So after this, US market entered war somewhere here. Pearl Harbor attack by Japan on Hawaii Islands. So this is where when the attack happened, and this is how stock market thereafter reacted. So till that time, US was not in World War. They had not entered into the World War II arena. However, when the World War II started, when for the first time they knew that World War started, you will be now surprised. This time, US market opened 7% higher. So last time during World War I, US market during the World War I announcement, market had fallen by 30%. This time, market they rose by 7% on the announcement of World War II. The thought process was that the companies will be able to gain from the defense order, etc. So this is where for the first time World War II was announced, and this is how US market responded. Thereafter, when Hitler invaded Holland and France, suddenly the stock market collapsed. But still, US was nowhere in the war, and although stock markets, obviously investors do panic seeing what happens in Europe and other countries, they also try to replicate those effects over here. So this is how markets had fallen during that time. So now let's come to the straight Hitler. Second most important point. Hitler knew that US was the powerful, and therefore they never attacked United States, and therefore Hitler had given clear instruction to their army and navy and air force that don't attack US warships. And it is ultimately Japan who did whatever in their wisdom that they did. When they attacked Pearl Harbor, US entered into World War II. And the biggest sigh of relief came to UK. Prime Minister Churchill, he for the first time in his memoirs that he has written, after the attack of Pearl Harbor, Churchill actually slept with a great peace, because now he knew if US is on his side of war, no one can defeat England. So this is how all these narratives did develop during World War. So once this war happened, and there in the bottom, sometimes in early 1942s, US entered war, obviously with Japan, in Coral Sea, Midway, and this marked the bottom of US stock market. So actually, if you see, when US entered into war, markets were down by only 19% after they entered into war. But thereafter, if you see at the bottom of the market, entire world was circled in war. There was no good news in horizon. Lowest trading volume of the decade. This is how markets bottoms are being made. demand prevailed, but the impulse, this is very important, the impulse was to sell. So now let me cover some of the fundamental economic macros that US was heading during that time. So in early 1943, when the budget was proposed, out of 109 USD budget, $100 was for defense. Can you imagine? Nothing for healthcare, nothing for social security, nothing for other expenses. 90% for defense. And as inflation was rising, and please note, this is in all wars, during World War I or World War II, across all countries, the only casualty that is inflation. Inflation does rise, so it's a normal process. So as inflation was rising, so they did rationing, and they tried to fix price. Meat rationing was happening just to control food inflation. So this is what had happened. But you see how stock market still kept on moving higher and higher and higher. This is the power, the resilience of investors, the equity, the belief in a company's ability to grow and survive. So this is how stock markets have behaved during World War II in Americas. And now let's focus to other countries. So now let's come to Japan. As I told you, Japan, they consider themselves as the superior. So let's come to. So this chart, probably many of you might have not seen. Japanese stock market from 1930s to 1947, before the bombing of Hiroshima and Nagasaki. So now nominal and real price. So this is a nominal price chart. So as World War began from 1939, Japanese also attacked China. They also they did this Pearl Harbor attack over here. Then stock market increased, rose. They took over Hong Kong, Singapore fell. So all these things steadily, the Japanese stock market went higher and higher. Thereafter, and as I told you, in 1945, the bombing of Hiroshima and Nagasaki happened, and 89%. So value destruction happened 89%. So stock market had fallen by 89%, and thereafter. So this is now, let's come to this. So market had fallen after the bomb of two cities, and thereafter Japan rose from ashes. They were so resilient. They were so absolutely clear that they want to bounce back, and steadily market made a fantastic comeback. Today, after this peak of 1989, it had fallen to somewhere around 7,500 over a year. In past 20 years. Currently, again, Japanese market is at around 26,000. So this is where we are in terms of Japanese stock market, how they have behaved during World War II, post the bombing of two cities, and how they came back. And after the 90% price fall, again, they come back and they've created massive wealth for investors. So now let's come to Germany, the most important country who actually was a doer, or Hitler was, in fact, he was the mastermind of this entire World War II. So let me go through some of the notes that historians have written about Hitler. Since battle began, no army had been able to prevail in the battle against Germany. Highly trained, disciplined, and well-equipped army in the world. This was Germany. It is said in the historian literature, Hitler's intuition about military and political events from 1935 until 1943 were original, unconventional. By 1930, Hitler had created the most successful economy in Europe, second largest after US. Industrial production up, unemployment disappeared. In 4.5 years, Hitler transformed a disarmed, chaotic, and nearly bankrupt country after World War I to the strongest economy of Europe. Hitler truly was a great leader, and he was able to do that. And therefore, people of Germany liked Hitler. Germany in 2.5 years had lost almost zero battles. And they defeated Western and Eastern European countries except Russia. UK, France, as I told you, they were no match. They were decimated. German attacked Russia in 1941. This is where now the real story begins. So now on stock market, let me briefly tell you, as I told you, 1932's world over markets had turned bottom. Germany also registered a bottom, and thereafter Hitler led this rally. They were able to quickly reduce unemployment, and economic boom happened quickly. No other country in Europe were able to rise so quickly as was Germany. And here the war begins. Britain, Barbarossa. So now let me come to this last battle. All this time, all these years, Germany won so many countries of Europe, but here something had changed. So let's understand what had changed. So when Germany attacked Russia in June 1941, his generals had warned that they should take first the UK, then Russia, because UK was reorganizing with the help of USA. Hitler did not listen. Again, so therefore they attacked. In first of the 3 weeks, the moment they launched the attack on Russia, within 3 weeks, you know what happened? 2 million soldiers were killed, 3,500 tanks were destroyed, 6,000 aircrafts were destroyed, 35% of Russian officers were killed. Russian Air Force and infantry were absolutely decimated. This was German force. Substantially, they were able to destroy. So Hitler failed to understand that Russia was a vast country and logistic was a big challenge. By early December, so they entered the war in June 1941. It was now December. It was so, the temperatures in Russia were minus 31, and the soldiers of Germany, they had left in June with summer uniform, summer army uniform. They were not they were not given the winter outfit, and here creates the problem. They were just 20 miles away from Moscow. The German army was only 20 miles away, but they just could not start their motorized vehicle, the tanks. It was just freezing. And 2 lakh of German soldiers had frostbite. And in the end, January 1943, in Stalingrad, the world was surprised. German soldiers surrendered. And that was the beginning of downfall of Germany. So over here, as I told you, Stalingrad. So this war changed the face of entire world, World War II. And when Germans were defeated for the first time over here, they were encircled by Russian troops and they were decimated. This was the time when German blinked and the downfall began. So thereafter, what happened? So Hitler lost his mental control, and he was very arrogant. And what he did was he froze the price of stock. So what he said, that you cannot sell, and if you want to, if German investors want to sell, they had to sell to banks, and bank will give them bonds. So practically the prices were frozen till mid 1948. And when that froze open, German stocks were down by 90%. 90% of wealth got decimated, got destroyed. And thereafter, after this world war and next 3, 5, 10 years, still equity investors made wealth if they were able to buy at that courageous price when no one wanted to buy. So equity has always made wealth. It just takes courage to go against the crowd when everyone is selling, when the things are at the darkest side. This is the time. Even in country like Germany, 10x, 20x return was made. So this index is around at the bottom of 1948. The index is around 20. By 1950, the index was 730, and today it is at 15,000. German index. So this is how equity investors have created wealth. But once they understand how history had how history played out with the life of investors, then they can have confidence that look, in the past investors have survived. So what the current hue and cry that we are all making? India as a country, we are still safe. There is a war that is happening somewhere in our neighborhood. So the learnings that of this entire world wars that I can just encapsulate. In most cases, stock market was able to foresee dramatic shifts in the prospect of the warring parties that completely escaped the contemporary observers. In the wisdom of crowds, as reflected in the level of stock prices, surpass the wisdom of even most astute observer of the current time. Wisdom of stock market was far superior and were not even close to astute observer during that time. Everyone, almost everyone, all great thinkers were wrong. The people sitting in US, London, they all in their clubs, when we read all those literatures, everyone was of the hope, believe that Germany is going to rule the world. They will not be defeated, and no one believed in UK, US, or other countries, and therefore they did not invest it. So this is how smart, intelligent investors, people of that time, thought during the wars. But it is when I showed you before when wars happen, when no one is willing to buy, and when prices are down, and when we start accumulating equity for our portfolio, that's the time we can make huge amount of wealth. In short, collective wisdom of market is above all. So now let's understand the returns that in the past 100 years, two set of countries have delivered. One set of country which were the losing, and one set which won the World War II. So all these countries won the World War II, and therefore the average return, annualized average return for past 100 years is 6.5%, and for losing country, it is 4.2%. The difference, although is huge when we see in terms of 100 years, but still, even a losing country, equity shareholders has made positive real return by staying invested. If he just runs away, or if he just invests in other runs away from the market and does not take risk, he will not be able to get that inflation adjusted real returns in his portfolio. So now let's come back to India-China wars. So now World War II is over, and I told you this is how countries have behaved, how wealth got generated. So now let's come to India-China war. In 1962, China waged war in India. It was basically all the border disputes. And Russia came to help us. They gave us big fighter airplanes. UK did not help us. US did not help us. And therefore, this relationship with Russia got deeper and deeper. So history repeats itself. So now, what was the stock price return? We can track Bombay Sensex data from 1979, but we haven't seen how Indian markets have behaved over the past 70, 80 years, or during independence time. What was how Indian markets have behaved? We all don't know. But when we studied all those things, we realized the same thing. History will repeat itself. When China invaded India and this war was there, again, the stock market corrected. Markets were down by around 13% from year till date. And after the war was being waged, markets was down by around 8%. In November of 1962, forward trading was banned because a lot of selling was coming because of this war pressures. Stock market selling was coming, and therefore the stock exchange had banned the forward trading. These are the times, when we accumulate stocks. So for next 2 years, those who accumulated stock after post India-China war made a fantastic return, because when this type of situation happens, it gives opportunity to to accumulate great quality businesses when others are selling. So this is broadly India-China war. So now where we are today. So why now? So now let's straight away come to why do we invest? So this is, let's understand our current scenario, current market dynamics from this image. So we are way back from euphoria. So euphoria was there sometimes in October 2021. Thereafter, inflation was slowly rising. There were slowly concerns. Interest rate was likely to be raised. So all these worries were there steadily when now and then the Ukraine-Russia war happened, and then people have started now shouting loud that there is inflation, crude prices are high, governments are into difficult situation, recession can happen. So this is where we are today. We are near this despair. We are near this bottom, and probably we have started this. So now I will give you certain data points which will give us conviction that we have crossed this state of despair, and now it's time for us to accumulate stocks. Now it's time for us to accumulate great companies in our portfolio, so that when good time comes, when few quarters down the line, when everyone forgets, that's the time we will be able to see massive wealth for our investors and others. So these are the few data points. So this is global stock market. Bad news has been discounted. So this is how it gets measured in terms of where the indicators are. So mostly all bad news are being now in the price and discounted, and therefore this is a great globally stocks are offering a great opportunity to buy. So this is Nasdaq 100-day moving average of high low. So here somewhere we are today here 0.29 means what? Number of shares that are making new low has reached its peak. And what the study says is, if now onwards, if we invest in Nasdaq for next 1 year, there is 100% chance that we will make profit. So this is what the study, this is what this data point shows. This data point is very important because you all have heard about ARKK Innovative Fund. So this is a high profile fund, Cathy Wood's $150 billion at its peak. You know what? ARKK fund is down by 78%. 78%, and ETF, a Nasdaq based ETF is down by 78%. Itna to world war mein bhi stock price, Japan was down by around 85%, 90%. Germany was down by 85, 90%. ARKK fund is down by around 78, 80%. This is too much. So now let's understand, let's read the wisdom of market. As I told you, World War I, the key learning from those World War was one should understand the unique wisdom of market. So ARKK fund, when this panic fall had happened, sometimes in 12th May of 12th May, so this fall had happened. But thereafter, the fall of June, 12th June or 15th June, stock prices did not move lower than this. So the aggregate of ETF, the companies, there's so many companies that they own, the prices did not move beyond this level. That means what? The selling pressure had exhausted. However, this is very important. Nasdaq made a new low of in June, sometimes in mid of June. But ARKK fund did not make new low during this time. They were just at the previous bottom. What does mean? This is an important indicator that we need to learn and understand. When there is divergence, it is said that, when the last stage of bear market, it comes when good quality names are being sold in the market. So when Nasdaq has the heavyweight of Nasdaq, when they are sold, that is the reason why Nasdaq is second down in June again, but ARKK fund is not, because The large part of market has corrected substantially, heavily. There is no space now, and therefore they did not move lower, but Nasdaq moved lower. So this, according to us, is the tipping point. This is a signal that gives us confidence that look, now correction in terms of price action is limited. Now it's time to accumulate. It may take time for sentiments to improve, but these are golden or chances, opportunity for us to accumulate equities for our business. And this chart is the most important chart, which will give you absolute clear conviction what has happened in the cradle of the USA is called the cradle of capital market. Let's understand that. So the white line that you can see is the stock making new low. There are 1,200 stocks that made new low in the fall of May 15th. But when during June 15th fall, stocks making new low were only 800. So from 1,200 shares to only 800 shares. So the shares making new low have fallen drastically, but Nasdaq was making new low. That means what? The selling breadth has reduced. The breadth is turning positive. It's time that now investors have sold panic, or panic is behind and the despair is behind. Now the times are, good times are coming. This is the reason why today, when we say that when we are here for you, and we are out here to tell you that it's time for our investors to tell them that, look, let's accumulate. What are the buying? When guns are being, when the cannons are being fired, these are the times to buy. And this is what our entire program is all about. We thought that if this is a great situation, let's create a program so that people really move, and actually does, investors get benefited out of this current situation. And therefore we have created this program, and what we want to, and what we are trying to do put in SIP is through this program, which is there from 1st to 30th September. It's time, this is the time wherein we should ask our investors to put in money. Because the study that we have done of the past that I showed you, all conflicts are great investment opportunities, and even in India. So what we have done and what we are trying to show you is this: every time after a market top is made and market corrects by 15-16% or more, and that correction has lasted more than 6-8 months, this is a great opportunity to invest, to accumulate. And for a SIP with a 5-year horizon, there is 100% chance that investor will make money. I repeat, investor with a 5-year horizon, and when markets have corrected, currently where we are today, basis Indian data from 1979 that we have today, there is 100% chance that investor will make money if he has at least 5-year view on the market through SIP, and obviously larger the better. So this is why, that's the reason why we are today here. That look, this is a great opportunity for investors to invest and create wealth, and in turn also take. So how does a put in SIP program work? So there is this training program. ARN will qualify, MFD will qualify if the net SIP book is 1.5 lakh or above. So this ticket size is one of the lowest in the industry that we have kept. There are no that minimum ticket size has to be this much, 5,000, 3,000, nothing. We want maximum number of investors should invest, and maximum number of partners should qualify. With that purpose, we have kept this ticket size as low as that we can, and therefore this is where, and this is probably one of the most least entry barrier program in the industry. So what will be the benefits to our partners? Obviously, investors will gain. As I told you, they will make money, and with a 5-year horizon, they will be always net positive, and this is how they will make money. But for our partners, This is an opportunity to, our thought process is, we want our partners to grow 10x, and when they grow 10x, even we will grow. So we will empower, we want our partners to be upskilled. They should know all the latest processes, digital marketing, the marketing narratives, what's currently going on. So let me tell you, our sponsor, they have built an online business of clients with sitting with only one office in Mumbai, around 3.5 lakh customers, and all acquired digitally. So this is how our learnings that we have during so many years, we will share with our partners so that they can also grow their customer base. Because on a see, you may know few people, but if you want to go to masses, you need to deploy advertising, you need to use marketing tools and techniques. And today digital marketing is one of the most powerful medium. So apart from that, we will also with the help of experts, they give superior technical analysis, or what do we call it, price analysis. How do you know some of the secret sources of secret technical analysis, how people analyze and make money, how to analyze business fundamentals. Basically it's all about secret source of growth, what all things that are required for the business to grow. All those things that we will share. Ultimately, this is all about also networking and relationship. We want you as partners, so that when we know each other well, and we have that friendship, we will be able to do business well together and grow. Ultimately, it's the program is will empower a lot our distributors and our partners. And so that's the way. So across 6 locations, we will have this this live event. When we have our BDMs will get in touch with you as and when those locations are available. But broadly, दोस्तों, ये आपको why the put in SIP program is, or the investor should make money, but also you also get empowered, you also make money, you also get knowledge and understanding of market, so that you also grow, we also grow, and let's create a bond, let's create a friendship. This is the whole purpose of put in SIP. So can I now hand over to Viraj so just before last, let me go through the disclaimer. Put in SIP program is an exclusively for our empanel partners to help them upskill while generating good returns for their client. The qualifiers of this program shall return insightful training program, and there are terms, conditions, etc., etc. So these are all mutual fund investments. So yeah, I think I have done from my side. So Viraj, over to you.
Thank you, Umesh bhai. It was wonderful effort that was been put by the team to come up with this kind of an analysis. At the end of the day, I could only understand one thing, कि ऐसे टाइम पे शेयर्स खरीदा तो इन्वेस्टर का पैसा बनेगा. This is the bottom line. That is what you are trying to put in. And at the same time, we are trying to put in an effort to upscale all our distributors also with who have empaneled with us. If you have many more questions, guys, you can freely write it to us on our mail IDs, or get in touch with most of our BDMs who are in touch with you. They will be able to help you get all the answers that you are looking out for. At this moment, we are not taking any question and answer, because this was completely for information that we have kept this particular webinar. But if you still have any specific questions, you please feel free to reach out to us, any one of us or any one of our BDMs, and we'll be happy to service that particular question. Thank you very much once again for your time and effort to be here on a rainy day everywhere across India. It's most of the time it's raining. But what we are trying to make sure that it rains heavily both for us and for our investors in terms of returns from our portfolio. Thank you very much, guys, once again.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.